The RBI credit policy, and of course we are getting news that the Sensex obviously is not too happy with only a CRR cut. The Sensex is down at about 170 points as of now, as RBI kept the repo rate on hold, only cut the CRR. The much anticipated monetary policy review, the RBI cut down cash reserve ratio by 25 basis points from 4.75% to 4.5%. The RBI cut means about 17,500 crore rupees have been freed up for the economy, which adds more muscle to lending power of the banks. However, it translates to very little for the Aam Aadmi's key rates. However, that is, the repo rate remains unchanged. Chaitanya Kalbag, editor, Business Today, now joins us for more on this story. Chaitanya, what I would like to know from you is that why is the market not very happy? Obviously, they are reading into it as a very tepid, as a very, very restrained measure from the RBI, and that's why the market's not very happy.
Yes, I think there were heightened expectations of a rate cut, especially after Finance Minister Chidambaram announced yesterday at a pretty hasty press conference that he planned to cut the fiscal deficit by nearly half for the next 4 years. So I think people felt that the government was really serious about getting its fiscal act together, and the RBI would keep pace with that. But that hasn't happened, and I think the RBI is truly caught between a rock and a hard place. Inflation is definitely not coming in within expectations. In September, it rose to 7.8%, which was much higher than what the RBI is happy with.
Okay.
And that's bad news.
Okay, let's first before we talk about the Aam Aadmi and the EMIs also, let's listen into the RBI governor, his explanation and his stance on this entire issue.
Based on an assessment of the current macroeconomic situation, we've decided to cut the cash reserve ratio (CRR) of scheduled banks by 25 basis points from 4.5% to 4.25% of their net demand and time liabilities (NDTL), effective the fortnight beginning November 3, 2012.
All right, the governor there trying to, of course, make sense of the economy, but can we actually make sense of what is really going on? Chaitanya, what I would like to know from you is that the RBI constantly, everybody's looking into the RBI with binoculars, hoping that the rates would be reduced. Is it so easy? Obviously, the governor also has his hands tied up. Is there a way out of this situation? Higher inflation, rates can't be touched, nothing happens to the economy, we're going around in circles.
I think the governor in his statement made it very clear that the government has taken some pretty good fiscal policy measures recently, but the policy measures now need to start translating into action. It's all very well to announce measures, but those measures need to actually kick in economic activity. If you look at all the indicators like capital formation and so on, they look very bad, and GDP growth went down non-stop from last year, and now picked up very slightly in the first quarter of this financial year.
Okay.
But that's not good enough.
And to the Aam Aadmi, they don't consider this macroeconomic situation. They are just worrying about the micro value of money in their pockets that seems to be diminishing every day. Given the current scenario, are we looking at any sort of an EMI reduction in the near future, or it's going to be status quo? Hopefully not any increase, but status quo.
Well, the Aam Aadmi is being affected most of all by inflation, and that's affecting their daily budgets. And yes, EMIs are not going to go down immediately, but but you got to remember that prices of several things went up recently, especially things like LPG and diesel and so on. So all these have had a knock-on effect on the common man's purse. So there has to be a balancing act between what people have to pay more for and what they might pay less for in terms of housing or consumer goods bought on installments and so on. So I think the RBI is hoping that by the end of this calendar year, things will start to change for the better, and it's actually holding out quite clear indications that it will trim rates in the first quarter of the next calendar year. That is the last quarter of this fiscal year.
And is there a pattern to this, that the government is taking these hard measures knowing that it does not have too much of a maneuvering room? At the end of this day, I mean, it is about politics as much as about the economy of it. Next year, they can't do much. They're doing what they can. They're taking the bitter decisions right now so that next year, perhaps, they can have a little bit of goodies for the Aam Aadmi. Is that the way you're reading the situation? Is that possible?
Well, the government is in a hurry to come up with as many measures as possible that will make a difference to their electoral prospects, I'm sure, because everyone now is talking about approaching elections. When you think about populist measures like the food security bill, for example, that and so on, that might come into effect, that means more spending and more fiscal imbalance, and that's going to make the RBI's job even more difficult. So it's finding itself in a really difficult spot. I think there is going to be a meeting of the two trajectories sometime by the November or December of this year.
Okay.
But this was a scheduled policy announcement today, and the RBI couldn't really jump the gun.
Okay, so it doesn't want to jump the gun. Governor Subba Rao being very cautious and careful. Obviously, what he decides results, of course, in a huge ripple effect in the economy. So obviously, he can't take any chances. We honestly hope the situation improves over the next few months so that we actually get some good news coming in. Chaitanya, thanks for joining us here on Headlines today. We'll keep a track on that situation.